Hey everybody, GZERO Media is coming to you from inside World Bank headquarters during the spring meetings. There's a lot going on here in more ways than one. I'm joined by Rob Kahn, who is Managing Director of Global Macro, my colleague at Eurasia Group, basically our chief economist, I think is the right way to describe you. So you're the perfect person for a conversation today. You know, I do a lot of these international convenings, whether it's at the UN or Davos or here, and you hear a lot of acronyms. So I've made up one actually. It is GTR, growth, tariffs, recession.
Yeah.
And I want to unpack them, starting first with what was the growth outlook before Liberation Day?
I think the US and the global economy were in pretty good shape at the end of last year, fueled by a resilient US consumer, strong job and income growth. The US economy was doing pretty well, unemployment was low, and it was supportive and reinforcing of a global economy that seemed to be experiencing a broad-based expansion. I think we were in pretty good shape. That, of course, has all changed.
Right, so explain, it's less than a month.
Yes.
And there's so much uncertainty is the word I keep hearing.
Yeah.
Not just tariffs, but I want you to unpack that, but also what's happening between the Trump administration and Jerome Powell,
Yeah.
the chairman of the Federal Reserve. So if you can explain how each of those have impacted markets over the past few weeks.
So certainly, let's start by acknowledging that President Trump ran on a platform of change, and that included tariffs. So at some level, he is doing what he promised to do. But the pace and the scale of the disruption that he has delivered has gone well beyond, I think, anything those of us who are paid to watch and monitor and predict anticipated. And it is causing huge disruption. It is causing a sense of freezing up, a broad-based uncertainty that is having dramatic consequences. And that is really having global effects on the growth outlook.
Right, and then the Federal Reserve battle is also having impacts,
Yeah.
right? That's more
Well,
recent,
But that is, in a sense, a part of that. The Federal Reserve has a dual mandate. It's a simplistic way of putting it, but it is both concerned about sustaining maximal employment, but also producing price stability. That's core to what it's trying to achieve. The policies of the Trump administration, which are tariffs, of course, most significantly, that's what we're focusing on a lot this week, but also an immigration policy that's going to be disruptive to the labor market in the U.S., a fiscal package that will include significant tax cuts and will probably expand the deficit. All of this will put upward pressure on prices, and we can debate about how persistent that's going to be and how long it will last. But particularly coming after the pandemic, there's a real risk that it will destabilize expectations, get people worried about high prices coming again in ways that could be self-fulfilling. The Fed can't allow that to happen. It can't repeat the mistakes of earlier periods when it relaxed too quickly and allowed inflation to come back. And I think they're very worried about that. So they're being pulled now between the risks and the prospects of higher inflation and the risks of a slowdown in the economy. That will naturally, and I think appropriately, make them be pretty cautious in how they respond. What the president wants right now are rate cuts, because I think he does at some level understand that his policies are bringing down the economy, and he wants stimulus from the Fed as a buffer. I think he also likely sees the Fed as a very political institution and wants, in a sense, it to act in support of his agenda and sees the Fed as adversarial. And I don't think that is what's motivating them, but I understand that's where he's coming from. And I think from that perspective, he's frustrated. Now, let me just sort of continue on with this thought for a moment, because many presidents in the past have been frustrated that the Fed has not produced the monetary policy it wants. And there's famous stories. Lyndon Johnson was on the verge of physical violence towards a Fed chair at the time. But many presidents, from Richard Nixon to Bill Clinton, have been critical and have tried to put pressure on the Fed. And the Fed understands that, it can live with it, but it recognizes that its independence from that pressure, its willingness and ability to act responsibly and to push back against that is central to its credibility. And so at this time in particular, if it were just that, we would rack it up as part of the natural give and take of politics and markets. But the president has gone further. He has threatened recently to try to fire Jay Powell. He has escalated his rhetoric in ways that has unsettled markets. And on top of everything else that has happened, it has really worried people that the Fed could lose its independence, and that would undermine its market's confidence in the U.S. as an investment haven and a good place.
And in what way could that impact the dollar globally?
Money's leaving. That's what we're seeing. And the dollar is suffering as a result. The dollar is still going to be the world's dominant reserve currency. There's still, your trade around the world is going to be denominated in dollars. That's going to be the currency people use. That's not changing. But to the extent people really looked at the U.S. as a place where entrepreneurship was encouraged, where the rule of law was respected, and where as an investor you could be assured that your rights were protected, all of that is really being challenged in a way we had not to do with before. And it comes at this time where, as you said in your open, where we have this growth tariff mix going on that's really unprecedented in terms of the uncertainty it's creating.
Well, that's a great lead into the R of my GTR, which is recession. So Kristalina Georgieva, managing director of the International Monetary Fund, IMF, they released their growth report today. And she said recession's not likely. I think they put it for the US at something like 37% chance and also pretty low globally. Do you agree with that?
Sadly, no. I understand the IMF really should not be cheerleading a global recession. It should not be out there saying, we see the worst things coming. They should rally policymakers. And so it is natural that their analysis would say no recession. This week, people are more uncertain than ever, I think. And I think there's a bigger chance than usual that we will come out of the week feeling something very different than we went in. And if I had to predict, and I'm not as constrained as the managing director, I think we will end this week looking at each other and saying, we are heading towards a substantial U.S. recession, and we may even be in one now, because of the policies of the Trump administration, and you use GTR for growth, tariffs, and recession. I'm going to add a letter. I'm going to innovate on your innovation.
Please, by all means.
And I'm going to put a V in front of it for voluntary. Because what is also extraordinary here is this recession's not coming because of an inflationary surge that central banks globally had to respond to. It's not coming because of a global oil market disturbance that creates instability or a financial failure that causes imbalances to come to the surface. We've had those. This is from the leading country deciding to radically rewire global trade and finance in a way that is chaotic and unpredictable. And to many of us doesn't seem consistent with what the president says are his priorities. And so there is a voluntary nature to all of this, which is adding to the loss of confidence of investors.
That perfectly tees up my final question to you, which is, obviously in your career, you have examined many examples of whether it's a downturn, a correction, a crisis. We've talked about how this compares to the others. Is this a blip that we're going to get through, or is this potentially a major event?
I think it's a pretty major event. As I look back on Liberation Day, April 2nd, when the president titled it, when he announced the significant portion of his tariffs, it went far beyond what I had anticipated, and I thought I was being pessimistic. We're now looking, even with the exemptions and the negotiations that are now underway with a number of countries, and those negotiations are very important, but even should they lead to deals and understandings that reduce the tariffs he has threatened, we're probably looking at an average tariff rate for the U.S. that's close to 20% at the end of the year, compared to around 3% at the start of the administration. By comparison, that is above what we had during the Smoot-Hawley tariffs of the 1930s that contributed to the depth of the Depression and is unprecedented for our modern economy. So I think we're dealing with a shock that we don't have a model for. When people ask me, why is there so much uncertainty? I say, well, some of it is the president himself. His decision-making style, the uncertainty about what he will decide, that adds to, is an important source of uncertainty. I can't predict what the president himself hasn't decided yet. But I think it goes beyond that because there's no model out there. There's no course I took in school that has any historical reference that's really directly relevant to what we're living with.
That's pretty dire, Rob, but I guess it sounds super realistic at this point.
I think it's dire from a global macro perspective. I will say that there will be new opportunities in new industries. If the optimists will say that the invention of the Model T was a disaster for the horse-drawn buggy industry, but it did create some new opportunities. I don't think we're quite in that.
It's like the automation conversation in general.
It is the automation. And look, that gets us to another point, which is the U.S. economy has important sources of resilience and innovation. And at other times we've talked about AI and other factors that could have powerful long-term positive effects if governance is up to the task.
All right. Well, Rob Kahn, thanks for stopping by. This was enlightening as always, if not a little bit scary, but thanks for coming by.
Great to be here.